Australia's labour market delivered a mixed bag of results in July, with unemployment ticking up despite stronger than expected jobs growth. As the Reserve Bank of Australia keeps a close eye on these numbers, the outlook for interest rates and economic stability remains in focus. Australia's unemployment rate increased to 4.2% in July, up from 4.1% in June. This is the highest rate since January 2022, despite the addition of 58,200 jobs. Economists had expected the rate to remain stable at 4.1%. Employers added 58,200 jobs in July, with 60,500 full-time positions created and 2,300 part-time jobs lost. This job growth was nearly 3 times what economists had predicted. The participation rate reached a record high of 67.1%, indicating a strong labour supply. The Reserve Bank of Australia is monitoring the labour market closely as it weighs future interest rate decisions. The unemployment rate's rise aligns with the RBA's expectations of reaching 4.3% by December, a level near full employment. Market predictions for a rate cut have now become less certain. Despite the unemployment uptick, the labour market remains tight, with 6,300 and 7,000 people unemployed in July. Wage growth has slowed and job vacancies have declined by 3.7%, reflecting a cooling but resilient job market. The Australian dollar slightly strengthened while stock market gains were pared back. Let's get more on this now with Tim Waterer. He's Chief Market Analyst at KCM Trade. Good to have you back on the programme, Tim. Now, what does the rise in Australia's unemployment rate mean for the future interest rate decisions?
Good to be with you. Yeah, that's right. The Australian jobs data, notoriously difficult to predict, and that was the case again today. You mentioned the highlights there. I think if you're looking at it from a growth perspective, the numbers are solid. In terms of, there's been a lot of down spots in the Australian economy. Retail sales are soft. GDP is also well below trend. Jobs market, one of the bright spots. So if you're the RBA, you're looking at these numbers, I don't think it changes the game too much. The RBA have stated previously they'd like to see the unemployment rate moving more towards 4.5% to allow for better progress towards getting back to their inflation target. So I think if the big picture today, yes, it was stronger than expected. Jobs market remains tight. The tick up in the unemployment rate, I'm not putting too much, focus on that, because it is, as you mentioned, that's because of more people are looking for work. They're buoyed by what's happening. So there are job openings available, and there are employers willing to hire. So I think as I said, I think right now, if you look at the data, still looking more like we're going to see a rate cut in 2025 rather than 2024.
Right, and how is the strong job growth in July impacting the Reserve Bank's outlook on the economy?
Yeah, so in terms of the outlook, I mean, it's pretty much in line with, I guess, their projections for the economy for the rest of the year and into the first couple of quarters of 2025. So it's tracking reasonably tightly to the RBA's, projections, going back to their recent monetary policy meetings. So there weren't too many surprises here. I mean, I think the board, they would like to start cutting rates, but just where the inflation rate is now, and based on where the tightness of the jobs market, they're just not in a position to do that. And of course, that tight jobs market, what comes with that is inflationary pressures, and that's what's causing a delay for the RBA in getting back down to that 2 to 3% band. So I think the net outcome from today, it doesn't change the game for the RBA at this point. Probably still looking at 2025, but a lot can happen between now and the end of the year.
Now, what would be the broader economic implications of a rising participation rate and a cooling job market?
Yeah, so you can look at it from a good news perspective. As I mentioned earlier, I mean, people, are looking for work. And employers are looking to hire. So that's one reason why the participation rate has gone up, and of course the other reason is that there are more people. I mean, we've had a lot of migration over the past 12 months, record migration levels, so a lot more people looking for work. So yeah, from in terms of the jobs numbers today, not good news if you're thinking about or hoping for a rate cut by year end. But good news in the sense that, as I mentioned, the employment market is one of the few bright spots, and that's perhaps what has stop the Australian economy, slipping into a recession. GDP is weak, as I mentioned, retail sales soft, but that jobs market, that could be what's been propping us up and allowing the RBA to basically sit on their hands the past few policy meetings and just seeing how the data plays out before they potentially cut. Still an outside chance of November. I think we'd have to see CPI moving lower. We'll get a better read on that later this month. But if we look at what the futures rate market reaction was to the employment numbers today, that sort of priced out the chances of a November cut. So yeah, not good news for those who are on mortgages and wanting to see some interest rate relief anytime soon.